Before we get to today's picks, I want to clarify something. I have noticed queries about why I've begun discussing stock fundamentals, news, and other non technical details in these daily videos, despite this channel's focus on quantitative trading. Let me clarify, our algorithm for selecting daily oversold stocks established in 2019 remains unchanged. So, why the new layer of commentary? The answer lies in a blend of curiosity and a deeper search for understanding. Over the years, I have always wondered about the stories behind the stocks picked by our algorithm. How do these selections, which we might only hold for 24 hours, fit into the broader market narrative? What can they tell us about market behaviors and trends? I have always seen each of our daily picks as a character. This exploration stems from a desire to delve deeper into the characters behind our daily picks. For years, I have been eager to understand the context around these daily picks, their dynamics at play, and the factors influencing these picks. It's about reverse engineering these picks through a conventional analysis lens. By exploring fundamentals and news, I aim to learn more about my daily picks and, in the process, video journal it. The goal is to satisfy my curiosity, offer a richer view of market dynamics, and who knows, potentially uncover insights and patterns that could inform new strategies when we do a retrospective at some point. And by sharing it with my followers, I aim to foster a community of learning and exploration. I hope this reassures you that our commitment to our quantitative foundation is unwavering. Today's pick number one is X. Let's take a closer look at what's been happening with United States Steel Corp, also known as US Steel, symbol X on the stock market. Recently, there's been a significant drop in the stock price of US Steel. This sudden dip can be traced back to concerns surrounding President Joe Biden's stance on a big business move, a proposed takeover of US Steel by Nippon Steel. You see, when news broke out about the president planning to express worries about this deal, it sent waves of uncertainty through the market. This kind of political and regulatory scrutiny can make investors nervous. They start thinking about all the possible hitches and roadblocks that could come up in finalizing such a deal, and as a reaction, many decided to sell their shares, leading to a sell-off. But here's where it gets interesting. Despite these immediate reactions, there's a bigger picture to consider. Nippon Steel's offer to take over US Steel isn't just a random move, it's a strategic decision that could have lots of benefits for US Steel. However, the knee-jerk reaction to the news has caused a sharp fall in US Steel's stock price, with a lot of shares changing hands and plenty of action in options trading too. For those new to the stock market, this situation is a classic example of how stocks can become oversold. That's when the price of a stock drops sharply due to widespread selling, often more than what seems justified by the company's actual situation or future prospects. In the case of US Steel, despite the challenges and uncertainties brought about by political concerns, the company's inherent value and the strategic advantages of merging with Nippon Steel remain intact. Understanding these dynamics is crucial. It shows how external factors like political news can impact stock prices, sometimes in ways that might not fully align with the company's underlying health or future potential. For investors, especially those just starting out, It's a reminder to look beyond immediate news and consider the broader context before making decisions. Today's pick number two is TBBK. The Bancorp Bank is a Delaware chartered, federally insured commercial bank which focuses on service to small and mid sized businesses and their principals in the Philadelphia Wilmington market area, and on private label affinity group programs, including merchant card servicing. The Bancorp Bank operates within the bank's Northeast industry, which is ranked 178th out of 252 industries by Zacks Investment Research. All right, let's talk about how the Bancorp Inc. been doing lately. Imagine you're keeping track of this company like it's the score of your favorite sports team. In the last part of 2023, they scored a net income of $44.03 million dollars just in one quarter. And for the whole year, they made a cool $192.3 million dollars. That's like winning a championship in the banking world. Now, they're so confident about next year, they've told everyone to expect their earnings per share, or EPS, to hit $425. And on top of that, they're planning to buy back $200 million dollars of their own shares. It's kind of like a team saying they're not just going to win next season, but also planning a victory parade. With a solid game plan, the Bancorp has been upping its game in areas like net interest income, which is the money they make from loans and other investments, reaching $92.16 million dollars in just the last 3 months of 2023. They're really showing their strength, especially in the prepaid card league, pulling in more money from fees and services. Their financial health is pretty strong too, with total assets of $7.71 billion dollars by the end of 2023. It's like having a star studded team with a solid bench ready to take on whatever the market throws at them. So, if you're hearing rumors that the Bancorp stock is oversold, think about all these achievements. It seems more like the market's mood swings might be overlooking how well this team is actually playing. For those just getting into the stock market, it's a good lesson. Look beyond the daily scores and headlines. Dive into the team's performance, their strategy, and how they're planning to win in the long run. That's how you spot a potential champion in the making. Today's pick number three is TSVT. 270 Bio Inc. is a cell and gene therapy company. It focuses on the research, development, and commercialization of treatments for cancer. 270 Bio Inc. is based in Cambridge, Massachusetts. Recently, 270 Bio stock experienced a sharp decline, mainly due to concerns from FDA briefing documents. These documents pointed out a higher incidence of early deaths in patients treated with Abecma during a phase 3 study. This news was particularly alarming as it came just before an advisory committee meeting that was supposed to discuss expanding the therapy's use. Understandably, this situation significantly affected investor sentiment, leading to a notable sell off. Now, for those new to the stock market, it's essential to understand that biotech investments can be quite volatile. This volatility is especially pronounced when companies are under regulatory scrutiny, as is the case with 270 Bio. The FDA's concerns raised serious doubts among investors, which is why we saw such a rapid decline in the stock's value. However, it's also worth noting that investor reactions can vary widely. Some investors see this sell off as an overreaction. They argue that the company's focus on Abecma could still pay off, especially if the FDA committee ends up giving a favorable recommendation. This scenario illustrates the high risk, high reward nature of investing in biotech companies. The outcome of regulatory meetings can significantly impact a company's stock price, either positively or negatively. For those just getting into the stock market, this case underscores the importance of doing thorough research and understanding the risks involved in biotech stocks. While the potential for high returns exists, so does the possibility of substantial losses, particularly when regulatory approvals are in play. It's a vivid reminder that in the stock market, not every investment will be smooth sailing, but informed decisions can help navigate these turbulent waters. Today's pick number 4 is AGL, Agilon Health partners with primary care physicians to provide healthcare services. Agilon Health is based in California, United States. AGL operates within the medical services industry, which is ranked 63rd out of 252 industries by Zacks Investment Research. Let's talk about Agilon Health and why it seems to be getting more attention than usual, particularly for being oversold. Picture this. You're keeping an eye on the stock market and you notice a company that's been through a bit of a rough patch. That's Agilon Health for you. Recently, they reported earnings for the fourth quarter of 2023 that didn't quite hit the mark. They missed their earnings expectations, which is a fancy way of saying they didn't make as much money as everyone thought they would. Following this, experts who analyze stocks, we call them analysts, have started to think maybe Agilon's future isn't as bright as previously thought, leading to downgrades and even an underweight rating from a big player, Barclays. Now, imagine if you're playing a game and someone says your next few moves might not score many points. You'd feel a bit underestimated, right? That's the oversold feeling here. Interestingly, despite this gloomy forecast, some big investors, the ones with a lot of money and influence, like Wellington Management Group LLP and Morgan Stanley, decided to buy more shares. Yet, the stock price dropped to a new low for the year. It's as if the stock market is giving mixed signals, isn't it? On social media, where everyone has an opinion, the chatter about Agilon is all over the place. Some are worried about how much money the company is spending versus how much it's making, especially with its focus on Medicare Advantage, a program that helps older folks with their healthcare. To top it all off, Agilon is shaking things up internally, changing their chief medical officer and adjusting their revenue expectations for the next year. This kind of change can make investors a bit nervous as it introduces uncertainty. So, why do some think the stock is oversold? In the simplest terms, despite these challenges, the underlying fundamentals of Agilon Health, like their business model and market potential, might still be strong. The stock being oversold means that perhaps the market reaction has been a bit too harsh, giving a potential opportunity for investors who believe in the company's long term story. Remember, the stock market can sometimes be like a roller coaster full of ups and downs, but understanding why these moves happen can help you make more informed decisions. Today's pick number 5 is IMVT. Headquartered in New York, Immunovant Inc. is a clinical stage biopharmaceutical company which develops monoclonal antibodies for the treatment of autoimmune diseases. IMVT operates within the medical, biomedical, and genetics industry, which is ranked 77th out of 252 industries by Zacks Investment Research. So, why do people think Immunovant is like this hidden gem on sale? First up, experts who analyze stocks are pretty optimistic about it. They see the price going up in the future, which is a good sign. The company has also been sharing some positive updates. They're making progress, growing, and even working hard to make their medicines safer. Specifically, they're focusing on IMVT 1402, aiming to stand out in treating autoimmune disorders. That's a big deal because these are conditions where the body mistakenly attacks itself. However, it's not all smooth sailing. They've run into some safety issues with another drug, batoclimab. But what's impressive is how they're tackling these challenges head on, looking for solutions and not just giving up. This proactive approach, along with the thumbs up from analysts and their strides in medical advancements, suggests Immunovant might be undervalued by the market right now. That means for those looking into investing, Immunovant might just be an overlooked opportunity worth considering, especially if you believe in their potential to bounce back and grow. Remember, investing always comes with its risks, so it's about balancing optimism with a healthy dose of caution.